Hello traders, this is day number 37 of small cap market open trading. I've written a plan specifically to trade small cap stocks, which are notoriously volatile and unreliable, but also a favorite of new traders to trade. So I want to have a plan in place that's relatively easy to follow and allows you to take 100 trades or many more without blowing up your account. And the way we do that is by just trading one single share. We track all those trades for 100 trades, and if it's profitable after 100 trades, then we can increase our position size. So far we've done 53 trades. It is profitable so far. I go over those results every single weekend on Sunday. And today I took 2 trades, so let me show you how I pick the stocks each day, and I'll show you the 2 trades that I took this morning. So this is my small cap screener. I click those 3 little dots and click modify. Then I organize the list by volume, and I'm only interested in stocks that are trading with 500,000 shares or more right at the open. So it's over an hour later, so there's a lot more volume. But this morning there was only maybe 3 stocks that met that criteria and were 5% or more in percent change going up. So let's take a look at the video now, and you can see me kind of screen through the stocks. So they must meet a certain daily chart criteria. It's all written in detail in my trading plan. So that helps me know right away whether or not I should even watch a stock or not. I just refer to my trading plan, and if it does not meet the criteria to keep the stock on my chart page, it gets rejected, and I don't even need to worry about it for the rest of the day. So BTU, that met the criteria, so I was watching that one. But it kind of gave me an entry at the same time as another stock, which that rarely happens, maybe once or twice since I've been trading this plan. So out of 53 trades, that's happened maybe a couple of times at the most. But when it does, you just have to kind of use your own experience. I try to make the plan as objective as possible so that there is no judgment calls for you to make during the trading day. You just kind of go down the list of your criteria, and when it tells you to take an entry, you take it, and that's it. But occasionally there is a coincidence where 2 stocks will give you an entry at the same time. And when that happens, that's the only time you're allowed to use subjectivity in my plan. And you just kind of pick one. And sometimes maybe they both look exactly the same. They're both giving the entry at the exact same time, and then it's really like a crapshoot at that point. But the main thing is that once you pick one, you stick with it, because the probability of the trade working out goes up on every single entry. So, or at least goes up considerably on the second entry, and then the third entry so far is around the same. But we've barely taken any third entries, so the data isn't that good yet for that one. So UUU, if I said enough U's there, this is supposed to be 4, and then BTU, we're both giving entries at the same time. Let me fast forward a little bit. CDEV actually was also giving an entry, but this one was such a low reward. I mean, the candles were moving 2 or 3 cents. So you're talking about, risking 2 or 3 cents to get 4, maybe 5, 6 cents, where generally the stocks that I trade will give me, somewhere around 5%. If they're low price stocks like these, 5-cent risk at the minimum and a 10-cent reward, or maybe a 10-cent risk and a 20-cent reward, something like that. So if I have a couple of ticker symbols that are giving me that type of a reward to risk, I'm going to take those trades over one that's going to give me just a few cents reward. So anyway, so basically the decision was, do I trade BTU or do I trade the quadruple U? And let me see here if I can even remember why I chose one over the other. Yeah, so again, and there's no guarantees. This is the part that is totally subjective. I just liked the way that this entry looked better than this one. Does that mean that it is going to work out more often or not? No, this is where you're kind of splitting hairs, and it does become kind of a coin toss at that point. So I decided to take this entry. So this was my first entry as soon as this 1-minute candle broke over this high. And there's my stop loss, which is really important to get into place right away, because these ticker symbols can flush down on you right away. And this one actually did. By the time I even got it up onto my single chart, you could see my stop loss got hit. So I got chopped out of that one, which again, that is a very rare occasion that I get chopped out and then the trade ends up working out. But, well, no, actually, I shouldn't say that. This is the entry number 1. So I have data that tells me that this happens 53% of the time. So it actually happens quite often. And that's the nice thing about tracking your statistics, is that you can see, it's just that it doesn't happen in this way. That's kind of what I was getting at, was where I get chopped out and then my entry number 2 gets triggered right away. Usually if I get stopped out on the first trade, the price will come down for quite a while and then I'll take the next entry. But as far as how often do I get stopped out on that first trade and then the second trade goes to 2R, that happens 53% of the time. And I only know that because I track my own statistics. I track my data. It's not something I read in a book. It's not something that I learned from some other YouTuber. This is my data. I hate when I see other YouTube traders say, well, this works out most of the time, or this stops me out most of the time. Like, what does that mean? And oftentimes you'll hear traders say, this pattern works 80% of the time, and they never ever show you any data. So I have to assume that they're just pulling those numbers out of thin air, or they're repeating what they've heard from someone else, or repeating what they've read in a book. And even if it's written in a book, does not mean it's true. So, and it's definitely not, even if it is true in that book, meaning that the person that wrote that book tracked those statistics and they came up with that number based on their own statistics, then it's only true for you if you end up with the same results. So my whole thing here with these videos is trying to encourage all these new traders to come up with a plan, follow that plan, track their trades, and track the statistics, and then you're going to know exactly how often these entries that you take work out or not. So that's what we're doing here. This is trade number 2. Now, this was not an easy trade, and I should say it doesn't really matter to me whether it's easy or not, because I have already developed the discipline to just stick to my plan no matter what and let the trade play out. So although I would prefer that I get triggered on an entry and it just goes straight up to my profit target in a few candles, that doesn't always happen. And if it doesn't happen, it doesn't really matter. I just let the trade play out. So, but just kind of imagine that you're in this trade and try to think about what you would do. You've got triggered, and right now you're in the red just slightly, but you're in the red. Here's your stop loss. Your profit target is way up here. And let's see what happens as we fast forward. Look at that. It comes down maybe just 1 cent above my stop loss there. Would you be able to hold, or are you going to get scared and try to raise your stop so that you save a little bit of money? And then look what happens. This thing, let me show you that in real time. How quickly this thing pops over this level here, right there, just out of nowhere. Huge pop. But then what happens? So we're still pretty far away from the profit target. I think it goes all the way to 973, which is still 8 cents away from the profit target. And you just sat in this kind of chopped around area. And now it looks like it's stalling out here. You're going to drag your profit target down and just take what you can get, which will minimize the power of this trade. Because if you lower your profit target and you turn this 2R trade into a 1R trade, then that means that the next trade you lose is going to cancel out this win. But if you maximize this trade and you get your 2R profit target, or maybe your profit target's 3R, then you could cover 2 to 3 losses. So let's see what happens on this thing. So now it comes up very close, 978, just a few cents away. Again, if you're a new trader, if you don't have discipline, very tempting to pull the profit target down. Maybe you wait and you see it come all the way down here and you say, wow, I just missed my opportunity. You pull it down. Now you're back at that 974, 973 level. And now it's just basically a 1R trade if you get weak and you pull your profit target down. Now look at this. Oh, I should have sold. I should have sold while I had the profit. But wait, let's see what happens. Coming back up again. Oh, now it's double topping. I should definitely pull that profit target, and get out while I can. But I don't do any of those things. I just let the trade play out. It's looking really choppy here. But what ends up happening is I get filled exactly where I want to at my profit target, 981. Not only that, but I believe this stock went to 3R. So we're tracking both the 2R profit target and 3R profit target. So let's go to the charts and we'll look at UUU and see where this thing ended up going. Yeah, so here it is. Let's see. Here was our entry back here. This was our first entry. We got stopped out here. Then our second entry was immediately following that, and our stop loss was at 956, I believe. And our profit target got hit around here, and then this thing continued to go to 3R. It just barely filled that 3R profit target, but it did before it ever came down and hit our stop. So anyway, really interesting stuff, at least to me. We took a 2R profit today. Well, actually, because we lost the first trade, we're walking away up 1R. But we also tracked that the trade went to 3R. So all of that stuff is going on the spreadsheet. And as I said, at the end of every week, I go over that data on an ongoing basis. So far, we're 53 trades into this thing. I want to take it to 100 before I decide whether it's profitable as is or if it needs some modification. But so far, it is profitable. And the reason why is because we trade the exact same way every single day. We stick to the plan and we just track the data. Even if it wasn't profitable, as long as we're doing those things, at the end of 100 trades, we'll probably be able to very easily figure out why it's not profitable. So that's the importance of having a trading plan and sticking to it, trading it the exact same way every day. So I always like to leave you with going every single trade with a plan and stick to it no matter what. Always take your stop losses, honor your profit target, and in the long run, you should be green. Take care.